Hi, and welcome back to the Food Fund, where we analyze investing in food, beverage, and restaurant stocks. Is the most popular plant-based food company a good investment? In this video, we will be analyzing if Beyond Meat stock is a buy. Could Beyond Meat, stock ticker symbol BYND, be ready to finally rebound? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Beyond Meat. Beyond Meat was founded in 2009. They are a leading producer of plant-based meat substitutes, offering a portfolio of new products designed to simulate chicken, beef, and pork, with a focus on sustainability and ethical food production. Beyond Meat has gained significant traction in the plant-based food market. The company is headquartered in El Segundo, California, and has around 700 employees. Now let's look at the price action. Starting with the one-year chart, we see that Beyond Meat had a CAGR of about -45%. Zooming out to the 5-year chart, we see that Beyond Meat had a CAGR of -50%. Beyond Meat has been a terrible investment for shareholders. Despite having such great buzz around the products and company, the share price has managed to fall off a cliff perpetually. Now let's hop over to market share and take a look at Beyond Meat's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under food and see that Beyond Meat is categorized as a packaged food company. Expanding the packaged food tab, we can see that Beyond Meat has the second smallest market share of the companies in this category and is bright red, indicating that the company is losing market share at a fast pace. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Beyond Meat, BYND, and see that the market share is 0.04% out of the publicly traded food, beverage, and restaurant stocks currently in the market. Beyond Meat commands a very small amount of food spend and has been losing that precious market share pretty consistently. The 5-year market share CAGR for Beyond Meat is -14%. This means that Beyond Meat's market share is literally evaporating. If we start in 2020, we see that the market share was 0.067%, 0.065% in 2021, 0.053% in 2022, 0.042% 2023, and 0.039% over the trailing 12 months. This is very bad going to worse. Let's take a look at the fundamentals to learn more. Gross margin is 6%. I remember when the company had negative gross margins. At least they have improved since that time. Revenue has compounded at around -6% over the past 5 years and has fallen to $324 million most recently. Beyond Meat's revenue has been falling since 2021 and has not yet recovered. When we look at cash flow, we see a -27% CAGR over the last 5 years for operating cash flow. CapEx has worsened at a 48% CAGR. As a result, free cash flow has actually improved at a 3% CAGR. Though operating cash flow remains patently negative, reductions in CapEx have been aggressive, going from the worst, -$136 million in 2021 to -$7 million over the trailing 12 months. This is the right move by management, but it may be years too late. Weighted average shares outstanding have increased over the last 5 years, going from 62.3 million shares in 2020 to 64.8 million shares most recently. Beyond Meat has been busy diluting shareholders. My guess is that shareholders are not happy campers. Now let's view return on invested capital. Return on invested capital has worsened from -22.2% in 2020 to -32.5% most recently. Though the return on invested capital bottomed in 2022, this value still remains deeply negative. I don't think we will see a positive value anytime soon. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 120 days in 2020 to 137 days most recently, Beyond Meat has actually gotten even less efficient over time. Again, though they are not as bad as the 180-day high in 2022, 137 days for a food company is ridiculous. Now, let's look at Beyond Meat's debt. The net debt to EBITDA has shifted negative over time, going from 4 in 2020 to -8.2 most recently. Given that Beyond Meat is still unprofitable, this means that the company still holds a sizable debt amount. There are few food companies as bad as Beyond Meat. I'm not sure why you would want to, but is it a buy? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Beyond Meat. It is a food company with a gross margin of 6%. The 5-year revenue per share CAGR is negative 35%, and the 5-year free cash flow per share CAGR is negative 57%. This is disgusting. A return on invested capital of negative 33% is really bad, but not quite as bad as it was a couple of years ago. Next, the cash conversion cycle of 137 days is ridiculously bad and is among the worst 3 companies out of all the companies I have analyzed on this YouTube channel ever. And the other 2 companies were alcoholic beverage companies, which means that they have good reason to hold inventory that long, though we're fermenting alcohol. Concerning debt, a net debt to EBITDA of negative 8.2 means that Beyond Meat is both unprofitable and holds a substantial amount of debt. So from a fundamental standpoint, Beyond Meat is super bad. Now let's switch our attention over to valuation. The price to earnings growth, or PEG ratio, cannot be calculated because Beyond Meat is unprofitable. Let's start with the positive. Beyond Meat is a household name. I'm not sure if the brand is famous or infamous, but they have successfully built a strong brand image and have a loyal following. This brand recognition is invaluable in the highly competitive food market, and that is all we have for the positive notes. Market share has eroded with mismanagement along with rising competition in the plant-based meat space. Companies like Impossible Foods and even established meat giants are entering the market with aggressive strategies. In order to try to address these competitive threats, Beyond Meat is burning through a significant amount of cash to fund its operations, research, and marketing efforts. This high burn rate is a major concern for both current and potential investors. Due to this high spend, Beyond Meat has struggled to achieve profitability, raising questions about the company's long-term sustainability. Beyond Meat was a promising company with a strong brand and popular products. However, poor strategy by management led to high operating expenses and profitability concerns. Overall, I give this company a 0 out of 10 using my proprietary scoring system. This is a first for the channel. Clearly, I am not a fan of Beyond Meat as an investable company, but I am sure there are a few adventurous souls out there who may be willing to buy the stock. More power to you brave individuals. Many thanks for watching. What do you think about Beyond Meat? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now, and don't forget to put your money where your mouth is.